Thank you for attending. Today we are going to talk about the methods on how to pick the most promising stocks in the financial markets. My name is Yazan Shakfe. I'm the Chief Market Analyst in One Trading Markets. The presentation or the webinar will be around 1 hour. Anytime you feel like you have any question, you can just drop it to me. So the schedule for today is a little bit of definitions and explanations on the stock market and how to trade the stock markets through a broker. And then we are going to discuss the analysis methods, mainly the fundamental and technical analysis. And based on those methods, we are going to see how to pick the most promising stocks in the financial markets currently. So quick definition about the stock market. So first of all, let's agree on one thing. So buying a stock means that you buy a share in this company. So that means you will become a partner in this company. So the idea of the company giving shares to investors is to raise capital and to allow more people to become partners with this company. And the stock market is the place where you buy and sell those shares in the company. Usually, the stock market allowing some companies to list their shares in the stock markets because they don't want any company to be listed in the stock market for a disclosure point of view. So they have a solid listing requirements to make sure your investment is safe, and that's why they are asking the companies to have certain criteria. For example, many years of operations, disclosing the financial statements on a quarterly basis, and so on and so forth. And this is what makes the investment in the stock market more reliable than investing in other small companies that are not listed. Stocks, actually, you can buy and sell those stocks even through the traditional way, as we see in the movies where people are in the stock market buying and selling and giving orders to brokers. But now, because of the technology, you can do it online via your broker and via trading platform, as we are going to discuss in details soon. The biggest stock markets in the world are apparently in the United States. So we have the NYSE, which is the New York Stock Exchange. The average daily volume is around $19 billion. That means $19 billion are traded on the daily basis. And we have the second one is NASDAQ, which is also in the US, but it's specialized in listing the technology companies like Facebook, Google, Amazon, Microsoft, etc. And the average daily volume there is around $7 billion a day. How to trade the stock market? Let's agree on one thing. You cannot go and buy the shares directly from the company. For example, I'm in Dubai. If I want to invest in A'mar shares, I cannot go directly to A'mar and tell them, hello, I want to buy some shares. The process should be as follow. You go to a broker that is authorized to buy and sell stocks on the stock market, and then you open an account, you provide the necessary documents, and then they will open the account, and then you fund this account, and the broker will give you access to this stock market. So it has to be through a broker, and the broker has the trading platform that allows you to buy and sell all these listed shares. To analyze the stock market, there are two main ways on how to pick the good stock for your investment. And usually stocks, you can use it for speculation or you can use it for investment. Speculation means like you buy it now, you sell it after 2-3 days. You are just looking for a quick gains or quick capital increase in the market price. However, investment is for long term. You're looking for capital gains plus dividends, which are the profit of the company that are making, and they are deciding to give to the shareholders. To analyze from a fundamental point of view, you have to look at certain criteria or certain values before you start your investment. Let's make it simple. When you are investing in a company, that means you will be having shares in this company. That means you will be a partner. So investing in a company, it's like you answer a couple of questions about having a partnership with any project. So let's assume that your friend has a project, or he has any business, and he wants you to be a partner with you. So the first thing you may ask is the profit. How much are you making? How much revenue you are generating every year, for example, or every quarter, or every month? What's your market share comparing to other competitors? And how is the competitors doing? How is the board members, or the owners of this company? How are their reputation? Do they have any problems? Do they have any negative impacts, etc.? And the most important, also the sector. For example, if you are investing in, let's say, the e-commerce now is booming. So maybe even if it's a small website, because the e-commerce is booming, you will gain from this high demand on e-commerce, for example. However, if you were invested in tourism, especially in the COVID time, it might not be a good idea to trade in the tourism sector or airlines, for example. I'm just giving you examples. So to cut the story short, fundamental analysis means you need to read specific news. Since the company is listed in the stock market, they are obliged to share their financial figures on a quarter basis. That means every 3 months they have to disclose, and there is something called earning seasons in the stock market. So it starts on January, which is the end of the year, April showing the result of the first quarter, July showing the result of the second quarter, October showing the results of the third quarter, and so on and so forth. So those disclosures are very important to see the earnings, the revenues, and you do more to see the market share and the competition and the board members and the sector analysis. Let's do a quick example about Amazon, for example. Amazon in June 2020, they were doing a lot of success in figures. You can see that the revenues were increasing 40%. The net income, which is the income after removing all the costs and taxes, etc., it was increasing around 100%. Net profit margin 42%, the operating income 90%. So all figures were very positive, and that was reflected positively in the shares for investment on a longer run, or in the mid run, or the mid range. Mid range, we're talking about 6 months to 1 year. Long run, more than 1 year. So this is simply how we see the figures of the stock markets, or the stocks that we can buy or we can invest from a fundamental point of view. Let me just go quickly through those figures. So where you can get them, you can get them from Google Finance. So it's finance.google.com or google.com/finance. And then here you search the stock that you are interested in knowing. So here you have, for example, here I search Amazon. So Amazon, here you can see all of the news on Amazon. It's important to read them if you are interested in investing in it. And here you can see the main financial figures quarter on quarter. So you can see from June 2020, September, December, March, and June. And you can see as long as the revenue is increasing and the operating income or the earning is increasing, that means the company is doing well and it's advisable to make an investment in it. I have some stocks that I'm putting on my buy list, which is Amazon, and also we have Microsoft. Have a look at the figures of Microsoft. The revenues were increasing 20%, net income 46%, operating income 40%. The cash, the net change in cash, you can see in all of the companies, it's a negative. Why? Because now the companies are like in the pandemic, they were making reserves in cash, but now they are releasing it. So now we are seeing decrease in the cash. So it's not a big problem. That means they're investing more in the operation. The third stock I'm putting on the watch list is Tesla. Tesla also, you can see the revenues increased 100%, the net income 1000%, and the operating income 300%, and that was also reflected heavily in the stock price as well. We also have from the banking sector, JP Morgan. Also, the banking sector was very successful because of the cheap money that is generated from the Federal Reserve. More supply in dollar and low interest rate is very preferable for the banks because they can lend more, and the major source of revenue for the banks is the loans. So more loans means more revenue, and this was seen here in the revenue and the net income, etc., etc. Also, surprisingly, now we can see that some of the tourism attraction companies, they are making a pickup. You can see Walt Disney, for example, now they are back in the increase in revenue and in the net income and the operation income. Have a look here at the operating income. It was increased 2,300% because the same time last year, it was in the middle of the pandemic, so the figures was very bad. You can see here in January 2021 or in June 2020, everything was in red, but now they are picking up. So this is also a good indicator to take in consideration if you are making a fundamental analysis. Any questions on the fundamental analysis before moving to the other side, to the other way of analysis? Do you have any question? Okay, good. So this is from one hand the fundamental analysis. The advantage of the fundamental analysis is that it's straightforward. Like you have figures, you have news. If they are positive, that means it's good for you to make investment. However, the drawback of the fundamental analysis is that it's not showing you the full picture of what's happening. Sometimes the figures are very good, but people are selling the stocks. That means you're just following a part of the news. Maybe there are other news that might affect this company that you are not aware of. The best example for that is Alibaba, for example. Alibaba is a very successful e-commerce company. If you see the figures are amazing. They are growing in revenues, they are growing in income. Their market share in China is very big. China is the second largest economy in the world. However, because of the legalizations that's happening in the Chinese market, people are running away because in the future they are seeing some drawbacks because of those regulations that are tight on the technology companies. So in this case, you did your homework from a fundamental point of view. However, you miss one news or one impact, and maybe people are giving the biggest weight to this impact. So that's where the technical analysis came. They said, instead of watching each and every aspect of the news, we see the reaction of the total information on the market, because this is what matters. Like the total information, people will get these information, traders, and they will trade based on it. If the sum of those news is positive, should be reflected positively on the stocks and vice versa. So they said if we can find some indicators that can show us where the hot money is moving, in this case, we are able to pick a very good entry points for our investments. There are more than 1,000 indicators in the market. We choose for you the major 3 indicators, which are trend, support resistance, and moving average. Let's start with the first one, which is trend. Trend is a sequence of higher highs and higher lows. Let's agree on one thing. There is no market in the world moving always up or always down. There should be some drawbacks in the middle. Why? Because this is the nature of investment. If I'm buying a house for 1 million and the price increased and reached 1.5 million, that doesn't mean I have in my pocket the profit of 1.5 million or like the profit of 500,000. I will get this profit when I sell this property. So when I sell this property and 10 or 15 people do the same, this will create a drawback in the up movement. So those tiny drawbacks, we call them profit taking. So this sell is just for me to take my profit. That doesn't mean there is a panic. So the uptrend is a series of higher highs and higher lows. This means that the market is in positivity, that's making the prices to go higher and higher and higher. And when it was pulling back, it was not reaching the previous low. So that means there was no panic. There was only profit taking. We see there is a panic when the sequence is no longer valid. For example, here, the market was making at the beginning higher highs and higher lows, and we reach a level where there is no more higher highs anymore. That means there is no more buying pressures, and we start seeing lower highs, lower low. Here we start seeing a panic, or we start seeing an exit from the stock. So in this case, I should consider a sell, because now it's changing from uptrend to downtrend. The downtrend is exactly the opposite. It's a series of lower lows and lower highs. Have a look here at this asset. So the price was decreasing and decreasing and decreasing, making more lower lows and lower lows. And when it was trying to pick up, it was not able to reach the previous high. So that means this stock or this financial asset is under pressure. So this is the first indicator that we usually see. We always say that the trend is your friend. So never ever trade against the trend, because this is where the traders are going. The second indicator is the support and resistance, and it's used when the market is not making any uptrend or downtrend. When it's moving sideways, like the example here shown on your screen, when the market is moving sideways, that means it's moving within a range. So the downside of this range, we call it support, and the upside, we call it resistance. Support is the price level where every time the stock market price reaches, more buying pressures appear and less selling appear, and this will result in pushing up the price higher. What's the reason? I don't care about the reason, because I'm a technical analyst here. So, and the resistance level is the price level where that the stock or market seldom surpasses. Like every time reach it, more selling pressures appears and driving the price to go down. So the strategy here, the first one that you can use when you see any range trading or sideways, So you can simply buy at the support and sell at the resistance. Buy at the support and sell at the resistance. The second use of the support and resistance is to trade on the breaks of the support or the surface of the resistance. For example, the market here was making a huge support, as you can see in the 3 green circles. Every time the market was reaching this price, it was bouncing back. 1 time, 2 times, 3 times. When the market breaks this support level, that means from a behavior point of view, that means that people who were pushing or who were interested in buying this stock at these price levels, they are no longer interested. So that means there is a bad news happening on the stocks and making them not anymore interested in buying, so that the sell pressures is now dominating. So breaking the support is a very clear sell signal, as you can see from here. The second example on the resistance, you can see here, this stocks, for example, there was a huge resistance here. Every time the market was reaching this level, it was bouncing back 1 time, 2 times, 3 times. The reason here, they're finding it a bit expensive, so they are selling. Our more selling pressure is showed here, so that means it's becoming negative when the market reached this level. However, surpassing this resistance means there is a positivity in the market, or there are positive news in the market, makes those investors who were selling at those levels, they are no longer interested in selling. Instead, they're keeping this asset in hand and they are buying more. So surpassing the resistance level is a very bullish signal or positive signal for investment. So this is the second indicator that we are discussing. So we have first the trend, and we have the support and the resistance. And the third one that we are discussing today is the moving average. The moving average is simply averaging the closing price of a certain time for the stock. For example, let's say for Ford Motors, for example, if I'm monitoring Ford Motors shares, for example, if I sum the closing price of the last 10 days, let's say, and I divide those 10 days prices on 10, if I sum them and divide it on 10, I will be having the average of this 10 days. If every day I'm doing the same for the last 10 days, I'll be having another line in the chart moving through the price chart. And then I can simply make a comparison between the price and the average price. Of course, of the chart price, of course, the average price is moving more slowly or like slower because I'm always averaging. But simply now I can compare the price to the average. If I see the market was below the average and becomes above the average, that means there is a positivity in the market driving the prices higher above average in a very short term. That means there is a momentum here being created in the market. That means there is positivity. So crossing the moving average from down to up, it's positive. On the other hand, if the market was above average and becomes below average, this is a negative indicator. Why? Because the market was performing really well and the price level was above the average of the last 10 days, but suddenly became below the average. That means there is negative news or there is negativity dominating the markets now, making the prices to become below the average. So this is how we use the moving average as well. So those are the three main indicators. If we can apply them on any of the stocks we are using, we can get a good entry points for these stocks. For example, have a look at the stock market for Facebook, for example, or for Ford, sorry. So there was negativity, there was downtrend, there were lower lows, lower highs and lower lows, and we start here seeing similar highs, and we start having here higher high and higher low. So from this area, we can see that the trend is changing to become a positive trend. And the market was below average, as you can see here, and becomes above average. And there was a resistance here, have a look here, 1 time, 2 times, 3 times, but then it was broken. So from this area, all the three indicators are now showing me that the stock price is moving up. So the strategy here is to buy when those three indicators are giving you a buy signal. If you want to make it also with fundamentals, this will be better, because fundamental also, they are showing you the good information about the company. So first, you filter the companies from the information, and you pick the companies that has positive revenues, positive income, and then you do this filter on those three indicators: the trend, the support and resistance, and the moving average. So you can see here that from this point, it's a very good entry point for buying, and this is what happens after that. It went up from $6 to $12, so almost the double. So this is in short our webinar for today. I will just stop the recording now. If you have any questions, you can always, of course, share it on my Instagram at Yazan Shakfe. I'm also sharing some analysis on stocks and other financial assets on my Telegram account at Yazan Shakfe Trading. So